Now, Washington Mornings on the Mall.
105.9 FM.
And AM 630.
WMAL.
8:37 on WMAL, where Washington comes to talk. Brian Wilson, Brian Neiman. On the phone, our good friend Larry Kudlow. Larry, of course, is the host of the Kudlow Report on CNBC. And, of course, the host of the Larry Kudlow Show, which can be heard on WMAL Saturdays at 7 p.m. Larry, how are you?
Morning. Good morning.
So stock market was off a little bit yesterday. I noticed it. What was driving that? And are we seeing a softness in the market or just a momentary dip?
Oh, I think it was a momentary dip. I mean, it was only off a few points. You know, it's funny. There was a story that ran yesterday in the Journal that money managers who have been doing well this year might take the fourth quarter off.
Really?
Preserve their gains. But I don't buy that for 1 minute because, first of all, there are a lot of events that are going to happen in the fourth quarter, including the election and including the fiscal cliff. And earnings may be a little slumpy in the third quarter that we're going to trickle in the next few weeks. And QE3 from the Fed is really short-term very bullish until the dollar collapses, in which case it's not bullish.
It's bullish until it's not, right?
I mean, it's bullish until the dollar crashes, and I don't know when that's going to be. But the longer the Fed keeps us up, the sooner the dollar's going to crash. So I guess my bottom line is you got to stay with the stock market while the Fed is pumping new money in. That's my basic take. It's not going to be forever, but stocks should do pretty well between now and the end of the year. And then you get the election. I mean, look, who's going to win? Is Obama going to win? The Republicans are going to take the Senate. What happens to the fiscal cliff? There's too much going on. So I wouldn't be too complacent here. That's what I'm saying. I wouldn't be too complacent.
Well, let me ask you about that because, a couple of weeks ago you seemed kind of bullish on Mitt Romney's chances of winning, especially with the economy. I did note, though, a CNBC poll of the economy, and it showed the president with a large lead over Mitt Romney when it comes to who would do a better job on the economy in the future. I was shocked to see that poll, especially that big of a spread. I think it was 43 to 34 in favor of President Obama.
Yeah.
What do you make of that poll, and what do you make of the fact that Mitt Romney may not be leading so much on the economy these days?
I don't know the answer to that poll. Hate to say it, but I haven't paid much attention.
All right.
I mean, most of these polls show Romney with a slight lead on the economy. I mean, I think the bottom line is most of these polls are just showing this is a very close race, aren't they? I mean, even with the few exceptions of some of these swing states, this thing looks so close to me. I mean, yesterday...
Yeah, close. How about that, Mr. Neiman? It's close.
That's what the polls indicate.
Because Neiman thinks it's going to be like a blowout for Romney, and I keep going, man, what are you looking at? What race are you watching?
Yeah, I mean, we had the Celinda Lake Ed Goaz poll come out yesterday. That's a pretty good poll. And so they had Obama +3. That's inside the error margin. But they had Romney up, 14% among middle-class families, 14%. And that's a pretty big number. And you see, I mean, I hear these isolated examples of battleground states going to Obama, but then you see, like, in Pennsylvania, it's even up. In Florida, it's even up. Now, I do think Obama's ahead in Ohio, and I do think he's ahead in Michigan. But Florida looks even. Virginia looks even. I mean, this thing looks even up. And if Mitt Romney, I mean, here, the scuttlebutt we looked at last night is that Romney's now going back to talking about middle-class tax cuts and the economy. Now, I think that's very good politics, and it's very good policy. And I think he's got to say to people, look, I'm going to lower your middle-income tax cuts. I'm going to lower them from, 33 to 28, from 28 to 22, from 22 to whatever, a 16. And we actually calculated on the board last night what that would mean for the three middle-class tax cuts. And you're going to pick up between $1,600 and $15,000 a year in increased take-home pay. And that's about as plain as you can be. $1,600 to $15,000 increase in take-home pay. Now, that is a great incentive. That is an inducement, first of all, to the economy because you get harder work. And second of all, it's exactly what people want to hear from Mitt Romney. And he's got to stay on that message. You know, Reagan used to always talk about, I'm going to increase your take-home pay by lowering your marginal tax rates. And Romney needs to say, oh, by the way, I'm not going to take away any of your tax deductions if you're in the middle brackets. No tax deductions. You're going to leave them as they are. And that puts the lie to the Obama argument that they're somehow going to raise your middle-class taxes. Just a lie. When you lay out the numbers and you look at the tax brackets and you look at the drop in the tax brackets, you see a very substantial hike in take-home pay. Romney should stay with that and hammer that. Whatever anybody asks him, how are you today? He should say, take-home pay is going up. Are you and Ann in good physical condition? He should say, yeah, our take-home pay is going up. You see what I'm saying?
Yeah, right.
This is a Reagan-esque message that he should have had during the convention, but he didn't have it during the convention. That's why he didn't make any money during the convention.
Hey, you brought up Reagan. I was just thinking, when Reagan fired the air traffic controllers who were threatening to strike, were their replacement air traffic controllers better than the replacement refs in the NFL?
Well, I think the answer is yes.
I hope so.
Wouldn't take much.
I mean, I'm a Giants fan. The Giants are on a roll right now, so I don't really care about the Packers. But it's a little bit weird. I'll grant you that. But, I mean, this take-home pay thing is going to be so important. And if, Ed Gillespie told me this in an interview, that they're going to roll out this economic message, put some more beef on it. That's exactly what they ought to do. This race is way too close to call right now. Way too close to call. I heard guys from my own network, the parent network, say Florida's over. And then a poll comes out that Florida's even among likely voters. So, it's this. And for a portfolio manager, and there's no question, majority of stock market investors want Romney. They see him as more market friendly. He's not going to raise their capital gains or their dividends tax. I think they're waiting for signals. And I guess you're just going to have to wait through the debates now, right? That's the next big thing, the debates.
All right, Larry. It's always a pleasure to have you on. Thanks very much.
Thank you. Bye-bye.
Larry Kudlow, host of the Kudlow Report. You can check him out every weeknight, 7 o'clock, and also the Larry Kudlow radio show at 7 o'clock on Saturday night.